All right. So let's take the questions one by one. So that's the first one. They're good questions. So
from Jesse, on a macro level, you had a discussion with Anthony Credelli in his podcast about currencies in the Eurozone. That
yeah,
one?
it was pretty prescient, I must say. So you got to blow your own horn at times. I'm blowing my own horn because nobody else can do it for me. Go ahead.
No, that's the truth. So Jesse was asking, let me see if I can get to it. After 10 years of U.S. markets leading the world, could there be a change when Europe takes the baton and leads the U.S.? And that's it. That's a good question, especially with what's going on with the euro and the equity markets.
It's a very good question. First, that's what the private equity groups are looking at, because they've put together big European funds. So they're looking, Jesse, for firms that they think are way undervalued to their book value. And, as private equity people are want to do. So and the covenants are for Europe only. So they have billions upon billions, and they are searching there because they do believe what you've just said they see, which is, hey, these firms have way underperformed, especially relative to the U.S. And I mean, why they have is a long and glorious discussion. And coming, what's the date today? Today's the 13th, 14th. Next
13th.
Wednesday, I am sitting and doing a podcast with the FRA and Bernard Connolly.
Oh my gosh, you're kidding.
Nope.
Oh my God, I got to get back into that book.
He's got a new book out.
Oh my God, we're going to have to, every single one of us is going to have to blast that all over social media.
Okay, wait, hold on. Let me tell you what the name of the book is kind of, and I haven't talked about it. Bernard's been in this came as a surprise. I didn't ask for this. They got this done. Hold on. They got this done. So total surprise to me because Bernard and I used to talk to Bernard all the time, but he's been doing whatever Bernard's been, and I guess been writing a book, and he was really kind of not happy with where the world was going because it went exactly the way he wrote and thought it was going to be. I only bring that up here. The name of the book is Pierre posted it on the last Notes from Underground from, what was that date? June 17th or June 14th or so. Yeah, June 12th, I think. The name of the book is You Always Hurt the One You Love, Central Banks and the Murder of Capitalism. Oh. New book.
Oh boy. All right, I'm going to download
I didn't even know it was out. Pierre, who I'm sure is French, but is an active participant.
It's amazing. Beautiful. I'm downloading it. I'm looking it up while we're talking. All right. So you always hurt the ones you love. Isn't that amazing? Especially as we're looking at, free money for, I remember, I don't know why I think this all the time, but the old RB&H,
free markets for free men. Yeah.
And now we've got free money for free people. Yeah. Just all over the place. So all of this liquidity jumping into the markets all over the world with the relative strength, with the weakness in the dollar and the strength in the euro, and it seems like and I think this is where Jesse may have been going. Is there a baton change? With the European markets taking the lead over the U.S. Yet, we're watching some pretty big. It seemed to me like I've been paying a lot more attention to the yen. And the euro.
It's tried. This is the missing piece of the puzzle. Now we have a Bank of Japan. And I'll come back to Jesse. We have Bank of Japan meeting tomorrow night. So, yeah, I don't know. There's no way the Bank of Japan is doing anything. I think they're very comfortable sitting here right now. Yes, Corona seems to be getting a little more robust in Japan for the moment. So some people are thinking, well, maybe they're not doing anything. Nor do I think the ECB will do a thing this week. No need to. And I think that they're going to be happy if the euro starts going up. But we'll get into that. So Jesse's point is absolutely well taken. The private equity people are right there with him, thinking that their assets are way undervalued. And one of the biggest pieces of the puzzle missing in Europe, of course, is the banks. The financials have been a disaster. They still are a disaster. Yeah, Deutsche Bank is above the 200-day. It's 200-day, but it's coming off such ridiculously poor performance that I'll leave. And believe it or not, Chris Whalen, who does such great work, one of my favorites. I've done several podcasts with him, and but he is on top of this stuff, and he makes the point that if everything is so good, and it's not only that, but another guy I know, they make the point, if you look at the bank stocks, and if you look at them relative to December of 2018, or actually the last quarter of 2018, do we remember that quarter?
Mm-hmm. Of course, absolutely. That was a great quarter
Right?
for me.
And then last year, we ran up to all those highs. But even from that last quarter, well, 18 not nearly as bad because they closed out that year right about here. But then the run up for, when everything started to come back, 2019, we're 35%, like on JP Morgan, under those highs. And they haven't come back. So we're almost mirroring what's going on in Europe. The banks are not healthy here. Now, are they not healthier? We can have, that's a long discussion. We can have that discussion because of the Fed, financial repression of the whole system, that the banks are paying an ungodly price and there's no money to be made. End of story. So that's why they push for some repeal and some easing off on the Volcker rule. But I would argue that it was a grave mistake. Some of the banks who have a trading orientation may do better, but the cost to the banks overall, because I think Lael Brainerd exacted some issues about stock buybacks and dividends. So, I'm not sure that the give-get was quite as good as the banks thought that they were going to get. And it could get worse in a minute. Really could get worse in a minute. So I am, Europe, Europe has struggled. There's no question about it, because Europe had to jump through hoops on a couple things. They were worried, they were facing an existential crisis, and money had shied away. Yeah, end of story. Money had shied, and rightfully so, because you didn't know whether the euro was going to make it or not. And we still don't. But the probabilities increased only because, as I've maintained and argued vehemently for the last few years, is that, hey, what Draghi did has trapped the Germans from top to bottom. And why people can't admit to that boggles my mind. But that is one of the issues I'm going to try to discuss with Bernard. Remember, it's not my agenda, and I'm ecstatic to be on with him, because Bernard is not only probably the smartest guy I know in global macro. Not probably, no question, but he's I can call him a friend. We've become pretty good friends. We've been engaged in long discussions. This is the first time, though, in a long time. So I will be looking forward to that. But Jesse's point is well taken. And I think that people are seeing more upside potential right now in Europe, especially if at Friday, there's an ECB meeting on Thursday, and then the EU, EC finance ministers and everybody else meets, and hopefully they'll get this package done. I don't think that the frugal four, as they call themselves, will be able to stop it. And so let's see where it goes. Let's see where it goes. That I would say.
Did you see the questions from Michael in Germany?
I did see it. Okay, so read them and let's.
All right, because I think it's a good follow-up. So as a German, I have a skeptical perspective towards ECB and the German government. While common sense seems to be that German people support in general the euro and ECB politics, I ask myself if this is really the case. This is the interesting part. The average German income after taxes is 1,800 euro per month. The average German wealth per capita ranks lowest in the EU, which came as a surprise to me, because I always thought that Germans are known as savers.
Yeah. Oh, they're
anyway.
yes, very, very big savers.
And that the vast majority of Germans can't afford to buy a home. Hence, there are high rents in high price housing environment. I feel great divide between mainstream and Wall Street, which I think that you had actually just touched on a second ago, at least in the U.S. With the weakness in the banks and the bailouts. But anyway, the morals of the German average Joe and the officially published numbers and sentiment. I think this is a really good question. Still German debt, a really good discussion. And Michael, are you here? Michael?
Yes, can you hear me?
Yes.
Great. Hello.
So Ira, this is Michael. He lives in Germany and Italy, depending on what time of the year it is.
Yeah, I think we've talked before when we've called it.
Yes.
Michael,
Hello.
You're not going to like my answer to your very good question, which is
It's okay.
Which is that Chancellor Merkel got played by Sarkozy. Remember when we used to call that Merkozy?
Yeah.
Yes.
Remember that, Michael? They were so close. And first of all, you can go read my blog in 2011. I wrote so many of them that it was a mistake to appoint Draghi. I did it in real time. That Axel Weber should have been the president of the ECB, and the Germans would have been far more comfortable. I'm not sure how different the policies ultimately would have been, but the Germans would have been much more comfortable with Axel Weber at the helm of the ECB. But Merkel, you know what? She got beat up by Sarkozy and wound up that Draghi was the compromise. And then Merkel continually protected Draghi. So when Draghi would, sign on to whatever it takes, the end result was building up that massive ECB balance sheet. My argument has been that once that balance sheet got so big, you can't really pull the plug on it. So nobody can leave. As I famously talk about, it's like in Bronx Tales. You can't now you can't leave. You can't leave. It's too big. If the Germans were to say, no, we're not supporting this anymore, the entire global financial edifice would probably crash. That's when I look at it, because the losses to the European banks would be enormous. Look at a lot of that bailout was to bail out Deutsche Bank, Commerzbank, the big French banks who owned so much Italian, Greek, at that time when Irish debt, they owned that because they were getting higher yields and it was all in euros. So, okay, you know what? But now who owns the Italian, because everybody's chasing yields. So even through Target 2 and all the other sophisticated mechanisms in the way that the ECB moves its money and everybody else moves their money in Europe, the Germans are really trapped here. And Merkel slept. I don't care what Der Spiegel says. I don't care how they talk about what a great leader Merkel is. She walked into this trap, and it's a trap, but at least she is now smart enough to understand there's no going back. See, the Dutch and the Austrians, the Danes and the Swedes, they think they can stop it. They can't stop it. Everybody's got too much vulnerability. And unfortunately, Michael, what's happening to the Germans is the same thing that happened to savers in America, which is why we had the rise of the Tea Party. And in fact, I originally wrote pieces back in 2013 that the AfD, the Alternative for Deutschland, was very similar to the Tea Party because it really both set up as economic pushback against the financial repression that was taking place. Because the entire European bailout, which it is a bailout, or Draghi's whatever it takes, has meant the financial repression of German savers, right? If you've got euros in the bank, you have done terribly. And the Germans are not, they're big savers, but they're not, they're not only low home ownership because they don't leverage, they're not borrowers like that. But back in the dot-com era, 1998, 1999, 2000, when the dot-com bubble broke, German investors who had gone into the Neuer market got crushed and reticent to come back to the equity market. So if you're a German with savings, what are you doing? What are you doing? In 2014, I have a whole list of them I could pull up where I was looking at basically German REITs to buy. Because when I started analyzing what was going to take place in Europe, German real estate had to boom because it was underowned. And anybody who was looking to be in the Euros, you wanted the safety of Germany. Because make no mistake about it, the German credit card guarantees Euro, right? There's no other way. Do you think Spanish rates would be where they are if there wasn't an implicit guarantee by the Germans? And I know there's another part to this question, which is what this will lead into. But it is the German credit card because the world looks at the European Central Bank balance sheet and it looks at the existence of the euro as German. I don't care what kind of shape Italy, but they believe that Germany stands behind it. Because you know what? Merkel allowed that to take place. 100% she allowed that to take place.
And I agree. And I think this trap is the reason why Merkel will not be going for a re-election in 2021. Because I fear the day when the betrayal comes clear to the German people.
I agree with you. And of course, that narrative doesn't get played out in the popular media because everybody wants, to treat Merkel like she was the good village Glenda in The Wizard of Oz. And, that she fell from the sky and that it's just not. She's made some real mistakes here. And now they've just gone so far. But I'll tell you how far I really believe that they've gone. And I don't know whether you were on. So back in May 24th, 25th, and 26th, over our Memorial Day weekend, I said that there was a sea change. In fact, I wrote a piece and I started buying euro down at 70 to 109 even.
Yep.
Because Wolfgang Schäuble came out in support of that 750 billion euro program. And over that same weekend is when the Frugal Four raise their voices against it. But Schäuble made and Schäuble is, again, the most fiscally conservative person I think that there is, maybe next to Otmar Issing or a few others, but he's very fiscally conservative. And when he was finance minister, he was, Mr. Nine, no. But all of a sudden, over that weekend, when he said, because the Frugal Four wanted that fund to be loans, and he said, giving loans to like Spain and Italy and those who were really in trouble, giving loans was like giving them rocks. Whereas if you gave them grants, that's giving them bread. And I had to read that 3 times. And when I read it, I said, wow, this is a big change. this now says everything. And it kind of, and I really felt that the importance of it was that it was answering the court in Karlsruhe by, here you had the president of the Bundestag who is now signing on to this. So now this gave it its legitimacy because the legitimacy of the sovereign is taxation. And so the person who runs the legislature, if they're willing to sign on to that, they to me were meeting the greatest criticism of the German High Court. So that was a major sea change. And I'm still, when I read the articles, there's only one other person I saw who referred to that. I still don't see it. When I read the FT, they still don't talk about the significance of Schweible. No, wow. And all I do is I scratch my head. I go, this is critical. This was critical. And it gave Merkel what she needed, which then she all of a sudden got more strident against the Frugal Four and basically it's made a deal, I think, with Lagarde and Macron. Because it's already too late. It's already, so they need a way out of it. If they were smart, they would take the negative interest rate in Europe and go to zero. Because it's virtually meaningless anyway, as far as I'm concerned. I know we can argue about it, but you've heard what you've done to the banks has been worse. The Swedes have told you that they went back to zero because it doesn't work. The euro would then probably go up to about 125, which is really okay. It's not, that's not an expensive euro, by the way. 200-month moving average in the euro is 125, 126. So now today we got that breakout that I've been looking for. How many times have we hit it? 5, 6, 7, 8 times and backed off. Friday did the same thing. We were waiting. I was waiting for that violation of the 200-week moving average on a Friday close. Failed miserably by the end of the day. So now today we got some, and this is ahead of that meeting, which becomes even more interesting. So, but it's a great question. But I think the Germans have been had here. Now it's a matter of what price they exact for the payoff. They can't go anywhere. Okay, the Dutch can say no, but the Dutch are, as we would say in America, a pimple on an elephant's ass. Yeah, they have veto power, but nobody is going to look the Germans in the face and say, no, we're not going along. It's just not going to happen. Not going to happen.
And as a German, this sends me shivers across my back. Thank you very much, Ira.
I'm sorry, I missed that, Michael.
This all sends me shivers across my back when I listen to you. Thank you very much.
Yeah, no, listen, I've studied this for long and in depth, and this is my Bernard Connolly's, masterwork, for the last 25 years. And I've had so many discussions, but we haven't discussed this of late because and then Draghi finished it by, of course, having to expand QE right before he knew he was leaving. And you know what? And I went back and watched the Santelli that I did and we were on that morning when they announced Christine Lagarde, and I said it was a miserable pick. But I pivoted about 4 months later because I saw the brilliance of the pick, because they go, she's the only one with the political acumen and stature to get this done. Because you're going to create a Eurobond. I don't know a way around this, which has been what the goal has been, which, listen, Rudy Dornbush and people, they all said that they did this backward anyway, but that's because Helmut Kohl and Mitterrand were in such a hurry, along with Jacques Delors, it's done, that they took the opportunity while it existed. And you see how fast German unification took place, and the buy-off was that this was going to happen. How it was going to take place and what was, didn't matter. They were groping in the dark and just going baby step by baby step. But Draghi did that, what he did, it expanded it to such numbers that you just couldn't stop it. So I hope that gives you what you want.
Ira, we were talking, you were talking earlier about, this stems from a conversation that Michael and I had last week, but we we were talking. You had mentioned earlier that the banks are in trouble, you know, and so hence the bailouts. And then we hear a lot of, especially now because we're in the, you know, we're in the election cycle, the Wall Street bailout versus Main Street bailout. So, and a lot of discussion about that, and you know, the mention, just with the discussion, coupling it with, and I'm sure I'm not going to do a good job of it, but to bring it back into our conversation with Germany and what Michael and I were talking about last week, and the way that he sees is that what happens in the U.S. will eventually kind of spill over into Germany, and that's an oversimplified version of what he said, obviously. But so with Deutsche and Commerce and all of them being bailed out, and if they failed, then the Western banking system ultimately implodes, and then moving into and coupling that into the U.S. And I don't know if I'm doing this right or not, but I'm going to coupling that with the weakness in the dollar, the Wall Street bailouts, the bank bailouts, which needed to be done. You know, do you think that the government is going to get it together and actually put together an infrastructure bill to get people working? We've got the workforce. You know, that's going to be the Main Street bailout and something that will ultimately help banks remain solvent and become profitable again?
Yes. If they don't, there should be a lot of gallows built, because if they miss this opportunity, they have failed miserably. I mean, the fact that they don't have a plan of action in March, it's a pox on all their houses. Not a Pax, but a pox on all their houses, because this should have been in place. This should have been in place and ready to go. Now, I'm not talking shovel-ready crap. I'm talking about, hey, you know that you're going to have to do this. The infrastructure, you've had how many civil engineers and structural engineers give you a report about, you know, trillions needed for bridges, roads, airports, trains, the electric grid. Come on, and you've had nothing. And now you know, David Rosenberg said, well, you can't do it, because when him and I have argued about it several times, and that's not an argument, it's a discussion. But that there weren't the workers available. Well, you sure got a lot of workers available very quickly. That's all I can say. A lot of workers. And that's why not to be ready is, wow, is to me unbelievable. And really, a pox on all of them.
So with Germany, with the country, and I just find it, I find this so interesting, and I am so looking forward to reading, to getting into Bernard's book and listening to that conversation. There's just so much there's so much here.
No question. There is. And, you know, and the questions about it are just dead point on. I can't tell you how much these are the important questions. Michael's questions, and he's German. And they've never had these questions answered. But once you understand that, look, at financial repression is a policy. If you don't think the Fed, Yellen and Bernanke and Powell have all told you, stop crying. Don't cry about zero interest rates, because your grandchildren have jobs, your neighbor has a job, your house value is going up, your stock portfolio is going up. Stop crying, because they're telling you, hey, savers are being repressed. That's what financial repression means in order to bail out debtors. If you don't see the simplicity of that equation, you're probably working for the government. No, that's what happens. You know, every policy, it's like tax policy. As Russell Long would famously say, don't tax him and don't tax me, tax the person behind the tree. All policy affects somebody more positive and somebody more negative. And the policy of the Fed is, plain and simple, financially repressed savers in order to bail out debtors.
Let me pivot into a question that that Lars asked, and then then I want to get into something that Peter's talking about. But Lars wrote liquidity. What would the signs to look for from the central banks to start to remove liquidity for good? What would that process look like?
Oh, well, we actually have an example, don't we? The taper tantrum.
Yeah.
Okay, and then for all of you who missed it, how about the last quarter of 2018?
Yeah.
Put that chart up for them. Take a good look, because that's what it looked like.
There was a great trading year in that quarter.
Right.
I mean, just beautiful. 29.44 all the way down to 26.03, back up to 29.44, back down to 25 something in the S&P. It was just huge.
You know what? And that's what it looks like. So, and I still maintain that the worst mistake made was when Bernanke cowered in the face of markets when he backed off of beginning quantitative tightening because of the taper tantrum. And I'm not saying that with hindsight. I said that was a gigantic mistake, but it shows, again, central bankers fear markets. They just don't respect markets. And that was a classic case. He became so fearful. He should have proceeded. You know what? There's pain to be paid. Well, the market's going to, you had a free run. It doesn't last forever. They turned and ran tail, and the markets knew that they forever had them cornered. And Powell, I was watching. You can go July 10th, 2018. I did a hit with Santelli.
I remember.
To that last quarter. But we were talking about it, and Rick asked me a question. He said, how would you do this? I said, do one or the other. If you're going to raise rates, don't do quantitative tightening. And if you're going to do quantitative tightening, don't raise rates. And then Druckenmiller famously in December of 2018, before Powell did his pivot, was maybe on Bloomberg or CNBC, and he said, look, this double shotgun, as he called it, approach has been a disaster, which it was. Find out what you got. What are you afraid of? Somebody wrote a piece, and it's, oh, I know. Eric Peters wrote a piece over the weekend. That central banks, and I agree with this wholeheartedly, they don't admit their mistakes. And yet, when they make bets, they're awfully big bets. That's the difference. You'll say, well, counterfactual. I take the counterfactual and stick it in your ass as far as I'm concerned. Because you know what? You don't. And if you're going to do something that big, sunset it. That way the market knows. That way the market knows. Lagarde did something absolutely brilliant at her last press conference. There'll be one this week, so we'll hear again. But she said by June 2021. Well, that was an important date because now the market has a sense of, okay, they hope to have this over. And that's not definitively over. See, like when the Fed did these massive programs in March, they should have put 180-day, and I said that in real time too, put a 180-day sunset provision on it. If you find out that it hasn't had the success that you wanted, extend it for another 180 days. But then the market knows what the ground rules are. We have no idea. I think it's a silly way to make policy. I think they're continually inept because you don't have people who really are market. Not that market people always get it right. They don't. But at least they respect market. I don't fear markets. I respect markets. I respect what they tell me. I think the central banker, absolutely the opposite. They fear markets, but don't respect them.
That's I've written that down. I'm going to have to dig into that. By the way, another great Bronx Tale reference in there. Is it better to be feared or loved? Remember that?
Well, that's Machiavelli. Yeah, that's.
Yeah, right. That's right. From the Prince before it came from Sonny.
Yeah. He was Italian. He was Italian too.
He was. Peter is in Ireland, and Peter had this kind of segues into it a little bit. In 2012, Powell shared a common opinion before he was in the chair, outlining his concerns. What and why has he pivoted? And, that's hard. What and why has he pivoted since sitting in the chair? Do you still think that he has the same personal opinion, but his position as chair has forced him to act contrary to his own beliefs, which I think is an interesting question.
That is a phenomenal question. We don't know. By his actions, I would say he has definitely shown himself to be a clone. I thought Yellen was much tougher than Bernanke. Definitely a clone of Bernanke and captured by Wall Street. But, I famously tell the story of June 27, 2016, when that was 3 days after the Brexit vote, 4 days. And I was at a symposium in Chicago, the Chicago Global Initiative, which used to be the Chicago Council on Foreign Relations. Powell was the guest speaker. It was sponsored by the CME, but I was a member, so I was going anyway, but I actually got invited. So it was an interesting talk, and then there was a question. And I got the last question of the night. You can go see it. I'm not making it up. And because it was Brexit, I asked him I was concerned about the ECB balance sheet. And I asked him very matter-of-factly, I said, who guarantees the ECB balance sheet? Who guarantees the ECB? Because the ECB had already absorbed a few bad corporate bonds, by the way, which didn't rest very well with people. They had invested $2 or $3 billion in that mattress company out of South Africa, and they had a couple other ones. So I asked that question. Without blinking, he says, they have a printing press. Well, I wanted to pursue it, but I kind of got choked off, and they're lied. But I thought about that for a long time. But then I thought so I was not in favor of Powell when he got the job, because that did not sit well with me. And you can go, well, who are you? Well, I'm a pretty astute observer of the global macro world. So, so not all opinions are equal, but it didn't matter. I mean, he got appointed. He got appointed again. I don't know why Trump didn't appoint Janet Yellen. We'll never know that. I know why Larry Summers didn't get appointed in 2013, but
why? That's interesting. Why do you think that Summers didn't get?
Well, I'll come back to that.
Okay.
But why it was Powell, I don't know, but I thought it was a bad pick. But then, actually, when he started, down the road of quantitative tightening, and I said, he's getting to be a better pick. And I said it very openly on Santelli. I said, you know what? He's actually trying to put in policies to extricate the Fed from this, what I think it was a terrible situation. So, but then, once he does the Powell pivot, and then he couldn't race fast enough in 2019, even with unemployment at 3.5%.
Yes.
Okay. So it showed me a lot. Why don't I think that Summers got appointed? Because Lizzie Warren was not going to allow it, as Sherwood Brown and even the Republican from Louisiana, David, they were just not going to allow it because Summers was too close to Wall Street. In fact, he got some big paydays from Wall Street for some interesting things. D.E. Shaw, So, and I knew that Lizzie Summers couldn't stand him because she blamed him for the repeal of Glass-Steagall and other things that made the great financial crisis. And when they bailed out Wall Street and left Main Street hanging, not going to happen. And again, I can tell you this fact. This is all provable. So Kudlow comes out and says on CNBC, my sources tell me it's Summers. I sent him, well, with what's her name? What's her name? Kelly Evans. So he did it on Kelly Evans' show. I happened to be watching it. And I said, there's not a chance in the world. And I emailed Kelly Evans. I said, tell him I have a very sizable bet donated to charity that it's not going to be Larry Summers. He wouldn't take the bet. But he was adamant on her show. My sources. I said, yeah, you better check your sources. Because there was no way. Lizzie Warren had just got elected to the Senate. And what's his name from Louisiana? David.
Oh, I want to say David Duke just to bust balls.
No. He was a U.S. Senator. I'll go get it right now.
I don't know why in the hell I can't remember his name either.
Oh, it's super easy. So, sorry. Get rid of that. Somebody else. I'm having trouble getting into my. Oh, here I got it. I'm sorry. So I was very sure that wasn't going to happen. And if you read, Lizzie Warren, like her or don't like her, it doesn't matter. She had just been elected, and there's a big story with her. I don't know if you know this. He's not a senator anymore, but I'll find it. Let's see. She was very unhappy because Obama, fucked her over too, and that's in her book. I'm not telling tales out of this. Is all right there. But, she had actually written a legislation for the Consumer Protection Financial Bureau, Consumer Financial Protection Bureau, and she was supposed to head it. David Vitter, I'm sorry.
Yeah, I just got to it too.
So she was supposed to be the chair of the first Consumer Financial Protection Bureau, which was going to allow her a target at Wall Street. She was going to target. Oh no, and I'm going to tell you what. You can say whatever you want about Lizzie Warren, but when it comes to Wall Street, understanding finance and banking, she knows more than what she's talking about. She's probably the brightest one sitting in there, is to understand its workings. And Wall Street banks, under the protection of Tim Geithner, Jamie Dimon, went to Geithner. We can't have this, so they blocked her. Well, she was furious because she had been promised it, and they knew that they really irritated her. So they tried to make her happy, and Obama called her and said, "Well, we'll support you. You can be, we'll support your run in 2012 for U.S. Senate from Massachusetts," because she was running against the guy who he was a Republican who in a off election because I think Ted Kennedy had died. So that seat, but Scott Brown, who was a Republican, he served only the last 2 years, and she was going to, and somebody was going to run against him. And Obama said, "We'll run against." And she was so pissed. She said, "No, I don't want to be a senator. You basically fucked me." So then Harry Reid and Schumer, said, "We'll do everything." So she relented and ran for Senate. That's how she got to the Senate.
So I remember she introduced a bill a few years back to get Glass-Steagall
yes.
reinstated. Yes. to reinstate Glass-Steagall, is that even possible at this point without crashing the entire U.S. central banking system and
Yeah.
banking system itself? Is it?
Yeah, you can repeal Graham Leach Bliley. I have a, now you're talking about all the things that are dear to me, because I was 100% opposed to repeal Glass-Steagall. I thought it was a gigantic mistake. And even the one who orchestrated it, Sandy Weil, in 2011, 2012, called it a great mistake. It was a great error.
And I think
I can tell you, and you can look it up right now, August 30th, 2002, letters to the editor in the Financial Times. Go ahead, Google it.
What date?
August 30th, 2002. Letters to the editor, Financial Times. See if it comes up.
Let's see if I can get him here.
It should come up. I've done it. I'm blowing my own horn a lot today. I'm sorry. It's not like me.
Oh, and rightfully so.
No, I'm in a cantankerous fucking mood.
I actually started. Oh, no, starring in The Music Man. Oh, that was from, yeah. That's from Notes from Underground. I'd have to look for it.
Yeah,
though.
no, it's probably there.
Is it?
I have it posted there. Yeah. See what it's there. See if the letter is there.
Now starring. That's hilarious, actually. Now starring in The Music Man, Mario Draghi as Professor Harold Hill.
Oh, no. Oh, yeah, but read down.
Underneath it, yeah. Okay, so Profit Center's Too Big to Fail.
That's the one.
Yes, Sir John Plender.
Yep. Read it.
How Banks Got in a Mix, August 21st, correctly identifies the systemic dangers that accompanied the passage of the Graham Leach-Bliley Act. Is it Graham Leach-Bliley Act?
Yeah.
The repeal of Glass-Steagall has pushed the U.S. banking system to the brink of moral hazard. Ooh, gosh. Ooh, the conglomeration of all financial services under one roof has entangled banks in numerous ethical conflicts, no doubt. Additionally, Graham Leach-Bliley has made several institutions so large that the Fed cannot allow them to fail. Oh my gosh, especially after a moral hazard, unbelievable. A single institution's deep involvement in every asset of financial dealings does not create greater synergy, but greater risk. Huge, it exponentially increases risk. These large private profit centers know that they are too big to collapse. The realization adds great uncertainty to the entire financial landscape, rewarding private profits while socializing the risk is a pathway to disaster. Glass-Steagall should never have been repealed without a bank forfeiting its right to federal deposit insurance, FDIC insurance. Yeah. That's amazing.
Because what most people don't realize is when Glass-Steagall passed in June of 1933, the same day after they voted for Glass-Steagall, imposition of Glass-Steagall, they voted for FDIC insurance. Now, that is pivotal because they had to put the clamps on the risk behavior of banks, and then they were willing to undergo FDIC insurance, which would stop the runs on the banks. But first you had to stop banks acting irresponsibly in order to make the insurance pool that much more solid. So, and that was always my stance. Okay, you're going to repeal it. Okay, if you want to be a leveraged up trading bank, you have to get out of the FDIC insurance pool. You don't get to have your deposits insured. You should pay market rates for money. So if I want to invest at JP Morgan, if I want to put my money at JP Morgan, but I know that they're taking all this risk, I should be paid a market rate for it. Capitalism solves that problem in a minute if they would allow it. Once you, because listen, I'm not anti-regulation. Glass-Steagall was a high-quality regulation. You did not have those problems. You had problems in the savings and loans, but that was because of Reg T, I think. So it was just a different time. But I was, for years, in fact, I asked, yeah, that was at a CME function. I asked Phil Graham whether he had any sleepless nights.
Oh God, what was his answer?
Yes.
I'll bet he does.
Pat Lynch was laughing his ass off. Still laughing.
Pat's a good guy.
He is a great guy. He looked at me and goes, bingo, you hit him right like a donkey with a 2x4. No, it's a disaster. And, you know, that's one of Europe's problems, too. So going back to Mike and who is it, Peter from Ireland?
Yeah.
Yeah. See, they don't have an insurance program like they do in the U.S. And that's hampered the banks, too, because, you know, it's zero interest rates or negative interest rates. It's not a whole lot of incentive to hold your money in the banks, especially when they're doing bail-ins like they did and in some of in Italy. Very difficult, which is why they want a Euro bond and a harmonized banking system where the risk is shared across all borders. So we'll see what comes out of that. But that's where that lies. But I think we answered those questions about Europe, unless I'll take any more. Otherwise, I'm going to go.
Just one more question that I kind of wanted to jump in.
Yeah.
And Judson asked that, and it ties into Scott, I guess, you know. So Judson's question is, can you provide any perspective or context on how important the Fed swap lines are for the rest of the world right now? Any risk to them being removed? And do you think that they will remain on a permanent basis?
Well, they're always there. Will they be there for all of them? It's a two-part question, really.
Right.
Do the ones who are newly added to it, will those remain? Probably. Right now, they've been drawn down quite a bit because they haven't needed the money, which is why part of the reason why the dollar could sell off here. Everybody's anticipated shortage. I mean, it may resurrect itself, but right now we're not seeing it. So they're important. As long as the U.S. currency is the mainstay of the global exchange system and trade system, the Fed has as I would argue, a triple mandate, if not more, because they have to ensure to sustain enough liquidity in the global financial system, which is what we saw in March, even when the gold dropped, what, $150 per day?
Yeah.
You know, we saw some significant moves because everybody was running, they were running around. There was a severe shortage of dollars. And it took a while for it to alleviate itself, which then goes back to Trump's stupid comment, or I won't say stupid, ill-timed comment, calling for a stronger dollar back in May, which really made no sense to me because this is not a trade issue right now. The dollar is not a trade issue. It's a finance issue. And the world would be better off with a weaker dollar because a lot of those who do owe dollars would find it easier to finance their debt. And again, that's what financial repression and everything that we're doing is all about. Everybody who's talking about the deflation argument, and Lacey Hunt, who I have great respect for, came out with a piece over the new Hosington letter talking about it over the weekend. I just, if we go into deflation, the Fed has failed miserably. And one thing I'm sure of is that the Fed will not allow itself to fail. Now you can say, well, how can it stop it? Well,
printing press.
You just let it go. You know what? Let it go. And I think the next big liquidity provide is going to be to the municipalities because the revenues on the state, local, and county level are going to be so dismal. That level so high that they're going to have to sell the bonds to the Fed.
Oh, that's interesting. So state, local, just muni bonds. They're going to start buying muni bonds. That's the next logical step.
They're already set up to do it. They've only bought from Illinois, as far as I know. I think about $1.8 billion.
That's interesting.
But now that June 30th is gone, now we're going to start to see some real activity in that market, because there's no way these revenue numbers can. Illinois' revenue numbers are going to nowhere near expectation. Look at O'Hare. You know, and I dropped my daughter off the other day. It's a ghost town.
Yeah.
Huge
Yes.
revenue stream. All the businesses, all the state, the sales tax, all of this, all the revenue that comes through it's enormous. And you know, this is just one place. So I think that's where the Fed's next big liquidity provider is going to be there.
There is no way out. There's just truly no way out. It's just except just to continue to spend and you know, create more and more money.
Well, as I say, and I know people don't like when I say this, but the Fed is now, you know, with at Powell's last press conference, when he talked about the unemployment situation, and he used the line a couple times, through no fault of their own, the Fed is now a social justice agency. Because you can't go down there. So that, and the only reason I bring that up, because that inherently makes them stay lower for longer. There's no, I don't know what way you get around it. It's lower for longer. And if you can tell me how you get around that being lower for longer, when you state that through no fault of their own, I'm all ears. I'm all ears. Now, I'm not arguing the moral basis of alleviating people's pain from unemployment. I'm not arguing that. What I'm arguing is it doesn't belong at the central bank, and they ought not to be speaking so loud to it. Because that puts you in a that ties your hands.
Oh.
And that's my point. So if your hands are tied, again, what do I even care about the data for?
Well, bad news seems to become good news again. You know, every time we get a bad report, the market turns around. We might have a little blip of, in the equities might have a little blip down, but then we turn around and rally. I remember you saying a while back that quantitative easing hides a lot of blemishes in the economy and the overall markets. Well, you know, with the Fed printing presses burning morning, noon, and night, it's hiding a whole lot of blemishes. So, you know, why would anybody care about?
Everybody is, you know, making a big deal. Well, you know, the balance sheet has gotten under 7 trillion. It doesn't matter to me. It doesn't matter because the Treasury is coming out with so many T-bills, and the Fed is buying them. If not directly, they buy them from the dealers, and they're giving them an arbitrage opportunity, you know, for a few basis points. But they're winding up there. So they are financing which is what yield curve control is all about, of course, but another form of financial repression. Because they need to keep rates low because the government is borrowing so much friggin' money. And everybody said, well, you know, there's no repo. Well, they don't need the repo now. Believe me, if you got a hit to a bank market, you watch what happens in the repo market. Right now, banks, you know, if the repo market reflected bank stocks, yeah, wow, you know, we'd really have something interesting going on. But this is where we sit right now. And the Fed, you know, I read one piece where somebody said, oh, the stock market's not up because of the Fed. And it was laughable. I mean, you can make whatever case you want, but if you believe that money is fungible, and I'm one who, as long as you don't have capital controls all over the world, money is fungible. And that's what the there's an article in the FT today where the emerging markets are again screaming about what are going to be the effects from this easy money, because money is fungible, and when it's allowed to flow around the world, and its ability to disrupt, and that was one of the things I hold Bernanke in great contempt for, because he would never acknowledge it, the damage he was doing around the world. Now, I know you got to take care of your own, but not when you're the reserve currency. You bear a certain responsibility, but we've negated that responsibility long ago. But that's where we sit. Yeah, that's where we sit. There were really good questions on Europe. I mean, I can do more of them. And you know, my view is I've been bullish. The euro today, we did get that breakout. Will it be able to sustain? I got out just a little bit ago, so I'm going to try to finesse my way to buy some back, because I know with an ECB, you know, it's pretty soon we'll start getting some leaks about something or another, blah, blah, blah. And I'm really hard pressed to want to be long dollars. I just don't see anything good here. But going back to, I'll finish it off with this, with good news. And I thought about this because when I saw the equity markets rally last night, I said, okay, I know earnings are coming out. I know this is happening, blah, blah, blah. But it almost seems to me that as the morbidity level drops, you know, we have a lot of cases of COVID, but when you look at the death numbers, they're either changed the way they're counting them, or everybody is recovering them. So you're now getting down to almost 1%. We were at 5% morbidity. We're down to about 1.2, 1.3, and dropping as more cases. You know, and this is what some scientists and medical people have wanted to see, by the way. So I'm thinking that the equity markets are viewing this as good news. See, the morbidity is dropping dramatically, and that's a good thing. And now we're going to really get to herd immunity. So I'm almost thinking that that's the bad news being good news.
Without having the bad news being good news, without the Fed having to come in and spend more money to hold things up.
Yeah, they're not, but they will, because the municipal market is going to be in major stress. I'm not going to say in trouble, in stress.
What? Real quick, let me. Is there anything that you're looking at in treasuries right now? Last time we spoke, it was mostly about currencies and
yes, I'm looking at one thing, trying not to make stupid trades.
Yeah, I hear that.
Because it's just a terrible, you know, look at this. The equity market today is up, you know, what, 1.3%? The 10 years are down 4 ticks. European debt market yields are up far more today, which is why the euro is getting a little more robust action, because
Balloons and oats.
yeah, balloons and oats. You know, the Italian is performing as it should, because the euro is up, so there's no fear about the euro. There's no existential worry about the euro today. The frugal four have yet to have their say for a while. You know, a lot of things going on. And now we got retail sales this week. We got CPI this week. Although I don't care about the data whatsoever at this point, because again, through no fault of their own. So the Fed's staying lower for longer, because we know they pivoted when unemployment was at 3.5%. Where is unemployment going to be before they pivot again and start? You know, this goes back to who asked that question about when the Fed could begin possibly tightening. Oh, that was the first question. That was
Jesse.
Right?
Yep.
So we go, oh, I just don't see it. At what unemployment level? Now, and again, in December of 2020, at the end of this year after the election, I asked this question, and you have to think hard about it. If unemployment is at 9% and inflation's at 6%, does the Fed raise rates?
textbook, right? Then that would be a scenario that they would, but I don't think they can in this present environment.
No, especially when Powell consigned himself to through no fault of their own. So now, are you going to? You want inflation, but one of the things the Fed is striving for is inflation, because nothing relieves the debt load like the illusion of making more money, but it's just inflation, and you're paying back bonds with ever cheaper currency. That's the history of this country, by the way. We've gone through those bouts. 1896, William Jennings Bryan on the bimetal. Why farmers and people who had assets and a lot of debt were bimetallists, because they wanted inflation. As William Jennings Bryan, as that speech is called, the Cross of Gold speech. I will not be crucified on a cross of gold. So he was a bimetalist.
As certainly before, it was a hedge against the central banks losing control over monetary policy.
Oh God! You know, when I listen to these comparisons to 1929, I laugh, because we don't have a gold standard now. We have a dollar standard, but a dollar standard is a fiat currency standard, and print all you want. 1929, you were still on the gold standard. Remember, it's not until Roosevelt gets elected that we go off the gold standard, and owning gold becomes illegal. So I listen to all these analysis because they look at chart comparisons of 1929 and 1931, but the world is a vastly different place. But that's the contents and nuance that I try to provide.
And that is our edge: context and nuance.
That's it. And,
That's
and,
one
and
of the greatest lines ever. Yeah, absolutely.
And trying to find trades out of that, you know, out of those two hopefully valuable inputs. So I guess that's all I got, unless if you have it, I'll take one more if there's one more question. Otherwise,
Somebody had asked, and I kind of have an idea of what. Let me see if anybody wrote anything. All right, so a newer trader to our group asked, and I actually am kind of interested because I read I saw something earlier. Let me see if I can find it on Forex Factory. Some governor, the Fed governor, said something about a digital currency. So
oh no, that was the Brits.
It was.
That was the Bank of England.
What in the hell does Bank of England say? I got to read that article.
I'll read it to you right now. I got it up here. Hold on. Hold on. Here's what he said.
Yeah, that's it. Yeah, Bailey. There he is.
Bailey. Yeah. Bank declines to rule out the creation of digital currency. Yes, I have the headline. I saw it. I was more interested. Mike and I were more interested in Germany's sex workers' demand to go back. Which is, which is right under that. Sorry.
I see that. Yeah, I saw that.
As long as I can pay with Bitcoin.
So that's
we can cover the whole board there.
Yeah, you can. Ethereum. Can I use my excuse me? Can I use my Ethereum? And then instead of the red light, the blue light goes on.
Yeah, I'm going to tell you what. If the sex workers are as smart as I believe that they are, they'll definitely take Ethereum.
Oh, they would.
They might question taking your dollars, but Ethereum's good. Money good.
Well, I know you don't trade Bitcoin, but
I almost bought some on Friday.
There you go. That was going to be my question.
Thanks. I had my finger, and I go, you know what? I'm heavily involved in the euro here. And I said, I don't want to get involved with it. I was going to buy it actually against the gold, just to play with it a little bit. But I said, don't cloud the issue here.
Send a couple of soldiers out after it.
Yeah. You know what, Matt? You know my history way too well.
Well, that's how do we learn, right? I mean, all of these years that I've that I've been able to ask you questions. How have I been able to learn? How are we all able to learn?
Yep.
The only silly questions or the only stupid questions are the unanswered ones or the unasked ones.
Yeah, that's right. And we see that in this room. So, okay, yeah. But all right, I think this was good. I think we covered a lot of ground. It's up to you guys to get these trades out of here now. The euro, and then we'll probably have another bouncy week, but you know, I crowed about that 200-week average for quite a while. And of course it sizes up, let's see, with the dollar index and even with the yen week today, but the yen doesn't carry enough weight in the index. And you know, that's the shoe I really want to see drop because that'll tell me a lot. We are just tinkling under the 200-week on the dollar index. So they're lined up here. They're lined up here.
Yeah, we've got good, we know where we're wrong, and that's the most important part.
And if Mike's still on, you know what? I hope he appreciates that analysis about Wolfgang Schweibel, because I think that's very important.
That was a good conversation. Thank you, Ira, for coming in.
Yes,
And
yes, thank you
with us.
very much. Great analysis. Thank you very much.
Well, I don't know, but Mike, it's just, you know, we just look for opportunities out of that. And I think that does bode well. And I feel for the average German saver, because they have just gotten crushed here in bailing out Europe. And that, you know what? And that's to me what the AFD is really why they polled so well. The immigration issue becomes, you know, it's a hot button issue that comes and goes. But financial repression is an active policy that has really caused a lot of pain. A lot of pain.
I understand that, yes. Mm.
All right. Everybody be well. And Matt, just send me an email. And again, I'm building out this website where everything's going to be available, everything I've done for years. So
Beautiful.
It's a treasure trove. And I think, you know, it becomes a listening and reading library. And hopefully it'll generate the discussion that you need to have. Because if you don't have discussion, you don't learn anything.
No, you're absolutely right.
Every question that I asked today push my own thoughts, and I have to look through them, you know, and think about them, and that's what it's all about.
When are you doing the interview or the conversation with Bernard Connolly?
July 22nd at 8:30 Chicago time in the morning.
Write that down.
I don't know what time it'll be posted, but I'm really, you know, listen, there's not much. I'm gonna let. If I do this right, I'll be able to engage Bernard and get him really to talk. Bernard is he's a very humble, very humble. He's a daily mass goer. I don't know if you know that. He's very, and he takes his time. One time we went to dinner at Capitol Grill in Chicago, and I brought Pat, I brought Lynch and Leo Mohammed, a bunch of guys. There were 10 or 11 of us. And for 3 hours we sat there and he couldn't get his food off the end of his fork. Because we had him so tied up and asking questions. Bill Shepard finally looked at me and says, "Will you let the man eat?" I said,
"Oh my God."
Questions?
The brain power, the brain power at that table is unbelievable. Leo,
we should have filmed it. We should have filmed that.
Absolutely.
That one was worth filming. Really was.
Leo's son Jordy could have filmed it.
Yeah. I don't know if they were talking to
they could have been on the outs.
Yeah, but it was really quite a meeting. It was probably in 2013. Wasn't that long ago? Really good. Really good.
I would have bought that dinner had I been able to just bust
For
the table.
3 hours. I'm telling you, I kept, Sherry goes, "Will you let him eat?" I go, "I'm trying. What do you want?" But this is the guy who I stood out in front of Starbucks on like 47th Street by Park Avenue for 3 hours. We put our coffees on an outside post and had a very animated discussion about Europe. People were looking at us like we were nuts. And it wasn't that nice a day either. But it was really, we didn't want to sit and bother everybody inside. So we stood outside and put our drinks on a post, our coffees. One of my most memorable experiences.
Oh, God, I would have loved to have been a
Oh,
part of that
God,
conversation.
believe me. People were king on it. And we're not, Bernard, believe me, every moment I have with Bernard is a moment I get to learn because he is just the smartest guy in the global macro sphere.
I'm glad that he's resurfacing, and I'm going to download the book today.
Yeah, go ahead. Yeah, I gave you the name of it. It's posted on the last blog because Pierre posted it, but yeah, I don't have it yet either. My brain is, with this being locked in and doing as much reading as I've been doing.
Are you back in Chicago yet? Or are you guys still out in
Yeah,
Arizona?
no, I'm here.
Well, let me know if you want to get on the links course. Well, not links, but on the golf course. I'm relearning how to play golf, which has been kind of.
Where do you play at?
I play at Midlothian Country Club on the south side, 147th and.
Wait a minute, your son caddies there and you play there?
Yeah.
Yeah, I heard you're a lousy tipper.
I'm a great tipper. I'm a lousy player. That's why I tip well, because I'm so bad. I don't want all of the caddies be sitting around that caddy shack talking about what a terrible golfer I am. So I always tip well.
Yeah, you know what? I always over tip caddies because I did it. I didn't do it for that long. But Mike Perlin, right?
Yeah, of course.
Him and his brother, Evan Scholars.
Oh, I didn't know that. No kidding.
Oh yeah. Yep.
The kid that caddied for me on Saturday was an Evan Scholar. So I haven't played golf in 17 years up until this year, Yeah. And so they gave me the Evans scholarship caddy. So I figured I'd been tipping well enough. They gave me the best caddy that they
Exactly. Believe me, and that goes a long way.
It does.
Yeah. Yep.
It does.
That's exactly right. They know.
Well, let me know if you ever want to go out. We'll go.
It's amazing though. So many clubs go, well, no more tipping. And I would look at guys, I go, and I don't belong to a club here in Chicago. So I did years ago, but it's been 27 years. But I look at people when I go to their clubs and they go, I said, let me give the kid money. I do anyway. I slip it in their pocket because I won't have it anyway. And I don't care who yells at me. I go, I can't stand when rich people become socialists.
I can't either, especially when it comes to reaching in their hands into their pockets. All of a sudden, they have hooks for hands.
Come on, it's unbelievable. You know what? I've parked cars. I've done every job. You know what? So therefore, I am very aware of what it takes to eat. And I don't get it. Oh, we pay them well enough. I go, don't make that determination for me.
I always, even when Jen and I were struggling, I always tip well. If I couldn't tip well, then we don't go out.
You know what? My blue heaven. Right?
Great.
Steve Martin.
Great movie. Great reference.
When he tips the FBI guy. I'm the FBI. You don't tip. I tip everybody.
He was running around shoving money in their pockets. Oh my gosh, I can't believe you pulled that one out of your head.
Okay. My parents, because my kids used to laugh at me. Dad, it's like you tip you duke it. That's what we call it, duking.
Yeah, me too.
But I go, you know what? People are working hard for a living. Be understandable. If you've ever done that kind of work, it's like the best tippers in a restaurant are waitresses.
Oh, yeah, absolutely. When we lived in Glencoe and I first started trading on the floor, when I met Judd, I was bartending at a place in Glencoe called Patrick and James. Rocky Wirtz would come in, and order a glass of $30 scotch and sit there and sip it in his fancy tie. He looked like he reminded me of Jackie Gleason, with his bow tie, his big fat rotund face, and he tipped me like $3-4. It was always the people that worked really. There was a woman that owned a shoe store. She came in every day, ordered a Sea Breeze, and every day that damn Sea Breeze was different. I didn't know how to make them, so she just thought I was so funny and so charming. Double sawbuck every week. I got a double sawbuck from her. She was so good. The best tippers were people that have been in the service industry in some form or another.
Absolutely, who have known hard times. Absolutely.
Me too.
All right, that was a good piece. Are you gonna you'll send it to me because then I don't know whether Lizzie came on or not.
I'll send it to you, and I'm gonna post it on Twitter too. But I'll send it to you as soon as it's ready.
All right, I'll send it to her.
All right, thank you so much, Ira.
Right, thank you. Take care, guys.
All right. Thank you.
All right.